You're watching today's video technical update presented by FXTimes. It is Tuesday, September 14th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. The platform I'll be using for analysis is VT Trader. The US dollar is falling across the board. The dollar yen made fresh 15-year lows while the dollar Swizzy hit parity. The Aussie dollar has hit a 2-year high. The euro and sterling are late on this rally against the greenback but are starting to follow the tide. Gold is creating fresh historic highs, and this did not come from safe haven flow. Let's take a look at some charts. This video is being produced at about 12:15 p.m. Eastern Time during the US trading session. Starting with the dollar yen, we have seen this market continue declining even though there is a bullish divergence. There was a negative reversal here, and there was a swing projection to 83, which the market has hit. In the 4-hour time frame, we're actually projecting another decline towards this 82.50 area, which the market is poised to continue to in this swing. The market is also poised to continue lower towards the historic high of 79.75. But let's take a look at this this day chart and measure this swing from here, this 84.80 area, towards this 95 area, and mark the retracement extending past 100%. So if we extend that retracement further, we see that the market at 150%, 138.2, and 161.8% is this historic low, this 79.75 area, and this is therefore a logical area for significant support, and therefore at the moment we could see this market sliding towards that area. The dollar Swiss franc pair has been declining sharply since hitting 1.07 or 1.17 area up here. Sliding, the market has been sliding, and we see here in the 4-hour time frame a break below this 1.050, 1.060 area, and now that area should become resistance. Okay, this is a previous Fibonacci study. So here in the short term, where would we find support? Well, we could look at 150 area, 161.8, all the way up to 200 extended retracement. So we have this rally, and then this decline right now is 150% extended retracement. We could see this down to 0.984035 before we see any support. Looking at the weekly, we also see that the market is breaking parity, as well as this rising trend line. The RSI already broke 40 and is now about to break 30, giving us very bearish outlook going forward. Now, we should still see some support here, just around 0.96, 0.97 area. Okay, so look for the market to continue declining, but find some support at the 0.96, 97 area. If you have followed my updates on FXTimes, you've seen that I have been very bullish on Aussie dollar, seeing this market go towards 0.9550, 0.96 area, above this previous high of 2010 to 2009. The market is doing that here. If we project this wave 1 to wave, this could have been 3, 4, 5, or we are still in wave 3. In any case, if that we are in wave 3, then we could do some kind of Fibonacci expansion, and we also reach this 0.9580 area. So this is an important projection of these swings, and we are continuing confirming that in the daily as well as in the 4-hour time frame. We've been seeing very small corrections as the market accelerated into this channel. So I believe in the internals, this is a wave 3 developing, while this was wave 1, 2. So continue to stock this pair towards 0.95, 96, and then maybe there will be some topping action for correction back towards this area, 0.92 area. Here's the euro dollar in the 4-hour time frame. We seen yesterday, saw the market here rally. We projected this towards 1.2930 area. The market broke above that and now is at the 1.30 area. This is the area. If you look at the daily, this is the projected swing here, and the 1.3050 area, the 61.8% retracement area, is your threshold. If the market breaks above that, then I'm going to abandon any bearish outlook in this intermediate term. It's obviously already at least ranging and possibly even bullish. So looking back at the 4-hour time frame now, so now the preferred outlook is bullish, and that means to confirm it, we should wait for a throwback. The throwback, as long as it stays above this equilibrium of this range, the market should be bullish. It may not even reach that area. We may be testing the top of this consolidation as support, and then the market may continue to spring up towards previous highs. For example, here at 1.3340 area. If the market breaks above this 200 moving average, that's a very significant bullish signal, and we may be able to use this type of swing projection for the euro dollar. You see that points towards 1.41 area, but we'll see with this as the market approaches our previous high here at 1.3340. That's going to be an important area to monitor. Also look for your internals to give you your bullish impulse waves and corrective bearish corrective waves to confirm. So euro late, but now breaking above a consolidation area, possibly establishing bullish outlook. For the pound, we have been in this decline, and we actually projected this rally towards 1.5580 area, testing this 200 moving average in the 4-hour time frame. And this 1.56 area is really the threshold for your bearish outlook. So if the market breaks above this, then there's no more bearish outlook. The market may be bullish and pending some confirmation. And you see this is a breakout. RSI is breaking out above 60. We would like to see that break above 70 to confirm the bullish outlook. In the euro dollar, we already saw it break above 70. So the pound is even a little later than the euro dollar in that rally. Okay, in the daily, we see that here we have completed this bottom. This is a consolidation, and the market is breaking out of this consolidation. Look for it to go towards this previous high at 1.6. Other confirmation, your RSI here successfully broke above 70 and also failed to go below 40. Here the RSI has broken above 50 again, so it's giving you a very bullish continuation type of signal here. Alright, so pound and euro also now following the tide against the dollar. Okay, now on to gold. We saw yesterday that the market needed to break below these support levels to establish this topping action. However, the market did not confirm and invalidated topping action by breaking above 1260 and also breaking above the historic high around 1265, establishing fresh new highs. The RSI broke above 70, a very bullish breakout after failing to break below 40. So lots of bearish continuation signals. In the daily time frame, we see that the market can, if we use this range, see this range projection. We measure the width of the range and measure the breakout. Project the width into the direction of the breakout. This goes to around the 1360 area. We also see some resistance as early as 1325 area, which is the 150% of this swing. So we have an A, B, and then C, and that's your 150% expansion. Let me just do that one more time with the Fibonacci expansion tool. So we went up to A, then we go down to B, and we see this area 1320 area as resistance. Okay, so also the ATR is turning up after declining for a while, so the volatility may increase, and at the time of the breakout with increasing volatility, this is a confirmation for your bullish breakout. That wraps it up for today. Make sure to check out FXTimes.com Wednesdays at 3 p.m. Eastern for a live technical analysis session. Once again, I'm Fan Yang, wishing you good trading.